In this video, I'm going to be revealing one of the best trading strategies you're going to find on YouTube, and I'm going to be explaining a concept known as the daily structure. The daily structure. Most of you don't know what it means, so I'm going to be explaining it in this video. It's a type of breakout strategy that I use to trade the markets, and I've been teaching this over and over on my YouTube and on my Telegram, link in the description below. So if you've been taught trading breakout and support and resistance, especially, this video is for you. We all know what breakouts are, and we've been taught all those things when starting to trade. So basically, if you're a beginner or advanced trader, this video is gonna help you out. It's gonna provide a lot of value for you. So make sure you stick around, watch this video to the end to understand these concepts, and make sure you pay close attention, because one thing about watching videos on YouTube and stuff and watching breakdowns like this is that if you miss any important parts, it's gonna make you start um using the strategy in the wrong way. There might be just one missing thing that you just missed, and then because of that, it's gonna make you start losing trades and making a lot of mistakes with the strategy. So basically, if you have been trading breakouts or support and resistance, or you've been taught all these things, the basic stuff, then this video is going to be for you. I'm going to be showing you the trading strategy I've been using for over 3 years now. Started using it back in 2022. Yeah, was it 22? No, ending of 2021. I think like November, December. But before that, I was already using this pattern, but I haven't stumbled upon the strategy, the full strategy, what I call, or what is called BTMM. I started training BTMM back in 2021, like November, December period. But before that, I was already trading. If those of you that have been following my YouTube or following me on social media, you know I trade like M&W formations and stuff. I've been trading that already since back in like 2020, like since 2020. I've been trading all those stuff, like this stuff. Right. So I can say I've been trading this concept, the daily structure, for like 4 years. But my main strategy is for like 3 years. All right. So if you've been taught this trade, all right, so let's get into the video. What exactly is the daily structure? Right. What exactly is daily structure? Is the structure, the reason why it's called the daily structure is because it's a pattern that has been that repeats itself over and over again on the market. That's why it's called a daily structure. It's a daily pattern or daily market maker pattern that repeats itself over and over again every single week. Not exactly every single day, but in a week you're gonna see it on a couple of pairs, depending on what pairs you're looking at and how many pairs you're looking at. All right. So what exactly is this pattern? All right. This pattern is called the daily structure, and this is how it works. We have explained this before, but if you're new to the channel or if you're a beginner, this is gonna be new for you. All right. So there are three main sessions in the markets. We have Asian session, London session, and New York session. Now, Asian session is where we have 8 hours of consolidation. Price is going to be consolidating for 8 hours, right? Price is going to be consolidating for 8 hours in a tight range. Usually, this range, ideally, which you should be looking for if you're looking for the consolidation, ideally, this range should be from 25 to 50 pips. 25 to 50 pips in length or breadth or whatever, right? Should be 25 to 50 pips, right? If it's more than 50 pips, if it's like 60, 70, 80 pips, then that's not really consolidation, depending on the pair. If it's like gold, then that could be normal, but on most pairs, it shouldn't pass on 50 pips. If it's past 50 pips, then that's not really consolidation. So what we're looking for is we're looking for a tight range. We're looking for a tight consolidation area. Now, this doesn't always happen during the Asian session. Sometimes it might happen in London session and then move into New York. Sometimes it might just happen during the Asian session. Sometimes it might happen inside the Asian session, right? So the main thing that we're looking for is this consolidation, right? The reason why I say sometimes it might happen inside Asian session is because sometimes if you have, for example, this is where it usually happens. This is for more advanced traders. So for example, let's say the box is more than 50 pips, right? You have an Asian box. Remember, this Asian box is lasts for 8 hours, because Asian session lasts for about 8 hours. Funding Next just bought an amazing offer for you guys. It's called BOGO, which is buy one and get one free. So when you buy a new platform account with Funding Next, you're gonna get
one free when you pass the challenge. This offer is going to last for only 48 hours from the 18th of March to the 19th of March. So if you're interested, make sure to click the link below to get an account, and make sure to use the coupon code FN to activate this offer. So make sure you get an account today. Click the link in the description below.
Come on, it's ours. All right. So inside this box, if the box is more than 50 pips, maybe it's like 70, 80, 90 pips, and the box looks something like this, what's going to happen is inside this box, you're going to have this consolidation, right? So they could just move like this and then come up here and then start consolidating up here, right? So if they do something like this, the entire box is not the consolidation. Rather, this area here is the consolidation inside the Asian range, right? So that's why the reason why I say just look for the ones with 50 pips, 25 to 50 pips, so that this can be easier to spot. This is a bit harder to spot, especially if you're just new to the strategy. This is a bit harder to spot, right? But look for this. This is ideal, and that's what you should be looking for now. So when you look for the consolidation, what exactly are you looking for after the consolidation? Now, those of you that have been taught support and resistance and breakouts, you know that when you see consolidation like this, what are you thinking? What are you seeing on the chart? Basically, what you're seeing is you're seeing an area of resistance and you're seeing an area of support, right? This is what you're seeing on the chart, and this is what we've been taught, right? Most of you have been taught this support and resistance, and it's from the support and resistance that we now get the breakout. You can't have a breakout without support or resistance, right? Or maybe like trend lines or something. So when we have this consolidation like this, what did they tell us about support and resistance? You sell at resistance and you buy at support. So whenever price gets to support, like here, you're gonna buy here, and whenever price gets to resistance, you're gonna sell here. And then if you have a breakout, let's say the break below this support, now this support now turns resistance, and then you enter for a sell for the breakout to chase the breakout, or for some people, they break for the retest and then they enter again after the retest, right? So that's what we've been taught, right? Well, basically, what usually happens is the opposite of that, right? So I've explained this over and over again. Market makers, the way they move this market, the market is a place where you have buyers and sellers. You can't have a buyer without a seller, and you can't have a seller without a buyer, because if you go to a market and someone buys something, you're buying from a seller. If there's no one to buy that thing from, there's no way you can buy what you want to buy. And if there's no one selling what you want to buy, there's no way you can buy it. You buy from the person selling. And then at the same time, you can't sell to someone that doesn't want to buy. If there's nobody buying what you're selling, you're gonna go bankrupt. You're not gonna there's no exchange, there's no transaction going on, right? So now apply that in the forex market. Inside the forex market, you have buyers and you have sellers. So in order for someone to buy, someone has to sell to the person. And in order for someone to sell, someone has to buy from the person. That's basically how it works. And the way the market is, they're not pairing you with different people. So for example, someone here in Nigeria, they're not pairing you with someone in China or in US or the UK. They're not pairing you like that. The way it works is there's an order book. Market makers have an order book, right? Big banks, hedge funds, whatever you want to call them, smart money, whatever you want to call them. Market makers, they have an order book, and basically what they do is they take the opposite of our trades, right? So if you're buying on their book, on their order book, it's gonna record as a sell for them automatically. So they're gonna take your sell. If you buy, they take a sell. If you sell, they take a buy. And the reason for that is because they know that 90% of forex traders lose. So if 90% of forex traders lose money and blow their accounts, so basically, if you do the opposite of what 90% of people are doing, they're gonna make money, right? It's gonna work for you. So if someone that's always losing in the market, if the person buys, then you know that the market is gonna sell. Then you sell, right? As you're buying, you sell. Some brokers do this. They call it A book and B book. So basically, the A book traders are traders that are profitable, and the B book traders are the rest of the world, right? So what they do is they analyze your performance, right? If you're trading, if you're a profitable trader, they will know. Then if you're an unprofitable trader, they will know because they see all your transactions, they see your wins and losses, your stop, your all your trades. All right. So if you're a profitable trader, they move you to the A book where they are going to be going in line with your trades, right? But if you're not a profitable trader, then they could take you to a B book, or maybe there's another book separate from that. I don't know. I don't really know much about the in-depth part of it, but I know that they have an A book and a B book, and the B book is usually where they take the opposite of your trades. So if you're an unprofitable trader, then if you buy, they're going to sell. If they sell, they're going to buy. So applying that concept here, what do you think is going to happen when you're trading support and resistance? And support and resistance and breakout, these are like the foundational concepts of trading that you learn for free on internet, right? So what happens is when you have an area of support and resistance like this, you know that whenever price gets to this support, everyone is seeing it. You're not the only one seeing this. Everyone is seeing it, right? And since everyone is seeing it, those people trading support and resistance, they're going to be looking to sell at this area, right? Because obviously, if you look at the previous data, you say, okay, price has been consolidating and it has been bouncing off of support and resistance. So most likely it's going to bounce off of this too, because it's bounced off of here, bounced off of here. So your mind is going to tell you that it should bounce off of here too. So what happens is if you're going to be selling here, people are going to be selling at this area. And because of people are selling there, what's going to happen? And not only here, all the people that sold at these areas too, what's going to happen? Their stop losses is going to be above here. The stop loss is going to be above this area. And then what about people that are buying, right? Their stop loss are going to be below here. So people that are buying these supports at this area, the stop loss is going to be below here. Now, usually when people set stop losses, because what they teach us or what they taught, like if you're just starting to learn forex, they're gonna say put your stop loss maybe 25 to 50 pips above where you're buying or selling or above the structure, right? So if you calculate 25, 20, most people's stop losses are gonna be 25 pips away, 25 to 50 pips away, 25 to 50 pips away. Oh, come on. So most people's stop losses are gonna be 25 to 50 pips away from the box. Let me clone this. So okay, I think I've cloned it already. Yeah. Okay, let's put this. All right, so most people's stop losses are going to be 25 to 50 pips above this box and 25 to 50 pips below this box, this Asian range. So that's usually where liquidity is going to be. Now, liquidity is going to be all over here like this, all over here like this. So just imagine a pool of money floating just above these areas. So what's going to happen as a market maker and you want to hit the stop losses of people that are moving, not only people, other institutions like other hedge funds and stuff, what's going to happen? What are you going to do? Let's say your target to get to the target that you have to get to is to the downside, right? You need to continue the downtrend, the economy. You need to take it down. You need to take it to a specific price point, and that price point is below, right? It's a downtrend. Just imagine it's a downtrend. So what are you going to do? If you try to just go down, you need to create liquidity, right? So basically, if they want to sell, they need to get you to buy. So that's how they generate their liquidity. They need to get you to buy so that they sell to you. So now you want to sell as a market maker. Think about it. Think from the other part of the screen, from the other end of the screen. You as a market maker, someone that's moving the price. What will you do to generate buys at this point now? What will you do to generate buys? What you do is you have to get more people to buy so that you can sell. How do you do that? Now, basically, what you're going to do is you're going to create a pattern or it creates a structure in the market that's going to make people think that price is going to continue up so that you can dump it on them. So basically, it's called the pump and dump. So they pump it up and dump it down. So what you're going to do is you know that people are buying here already, but majority of people are going to be selling at this top, right? Majority of people are going to be selling at this top, mainly because it's a downtrend, right? Majority of people are going to be selling there. So, but even if majority of people are not selling there, let's say it's a 50-50%, 50-50% distribution of buys and sells here. So 50% of people are buying, 50% of people are selling, and now you have to offset that balance in order for market to move in the direction that you want it to go to, right? So you have 50% of buyers and 50% of sellers. That's an equilibrium, right? So the market is equal. That's why it's consolidating. So now, in order for you to offset this 50%, right? You need to get people. You need more people buying than selling. You need more people to be buying. So basically, maybe you need like 80% of people to be buying 80% to be buying, and then maybe the remaining 20% could be selling, right? What are you going to do to offset this balance? What you're going to do is you're going to take price up, right? So let's say you bounce from this area, people are buying, you have to take price up, and you're going to eventually have to break this resistance, right? Break the resistance. Now, this does two things. Now, it offset this balance. How does it offset this balance? In a way that, first of all, it hits the stop loss of the people selling. So all the people selling in here, right? All the people selling in here at this resistance is going to take out their stop loss, which is going to offset this balance, right? Maybe it's going to reduce it to like maybe 40%, right? Or 30%. And then how about the people that are looking at that trading breakouts? People are trading breakouts. So those people take trading breakouts. What are they going to do? They're going to add more positions here if they have not entered the trade. They're going to look at this as a confirmation that price is going to trade up. It's going to continue up, right? Most of you have heard of this strategy called the London breakout. This is how people trade. It's a very popular strategy. If you check in on YouTube, you're going to see it. People wait for the consolidation. After the consolidation, look for a breakout during London session and then trade the breakouts. All right. If you trade that, you're going to blow your account. Facts. You're going to blow your account. It's not a consistently profitable trading strategy. Yeah, you're going to win one or two, but consistently in the long run, you're going to blow your account. So most people are going to be taking breakouts here, which is going to also offset the balance because more people are now buying. So basically, it's going to get to the point where it's going to be 80-20, 70-30, something like that. Right. And that is what market makers want. So what's going to happen is when price has hit your stop loss and gone maybe like 20, 25 pips or 50 pips, depending on the pair. If it's like 50 for GBP pairs and all these GPY pairs, it's going to be more than 50 pips. But but for other pairs, it's going to be like 15 to 25 pips, right? So price goes up, takes out the stop loss of the people that are selling, offset the balance, getting more people to buy. People are going to be chasing this buy here, chasing this buy here. And what's going to happen? They're going to dump the price like this, right? After getting a lot of people buying here and buying here, they're going to dump this price. So basically, people are buying, they are selling to you. You understand? People are buying, they're selling to you. So they sell to you and take this price back down. Sometimes they might give you an even extra confirmation, which is going to give you an M formation like this, right? So this information is going to give you the idea that price is just pulled back and it wants to continue up, rally base drop, or rally base rise, or something like that. Drop base rally, whatever they want to call that. So basically, you're going to see this as a higher high coming to form in, and then they're going to change it and give you an information reverse, right? So now let me just clear this stuff so that it doesn't get too much. So basically, let me just clarify this thing and go over it one more time. So you're going to have consolidation, right? Which is going to get people to buy and sell. Let's say, for example, they break to the upside because they want to go down. If they're going to go down, they're going to break up first to induce people to take buys. A lot of people are going to be buying this, and at the same time, this hits your stop loss of people selling, giving it 80-20, 70-30 distribution of buyers and sellers, right? Right. So what's going to happen is they're going to do two things. They either break down like this, sorry, continue down like this after trapping people at this top part. They're going to go down like this, or sometimes what they will do is if they need to generate more liquidity and offset this more, they're going to pull back and then attempt to continue up like this. So when people see this, they see this as higher highs and higher lows, higher highs and higher lows. So more people are going to be even buying on the pullback, right? More people are going to be buying on the pullback here. They're going to look for some reason to buy this. Maybe they're going to stretch out, go to the past, and maybe draw a support level there and say, "Oh, this is support. They broke the support, and then it's going to retest. It's a break and retest." Or they say, "Oh, and maybe there's an order block at this area," and then they're going to that's what they're going to be looking for. So you're going to try to justify the buys, right? And then this is what's going to happen, right? This is going to happen. They're going to retest this area. They're going to retest this area, and then trap more people at this highs and then reverse back down. We are going to be selling here and here, right? We're going to be selling at this top parts. And this is going to be what? This is going to be the highest point for the day. This is going to be high of the day. High of day. That's going to be the highest point for the day. So we're going to be selling at the highest point of the day. If it's buys, we're going to be buying at the lowest point of the day. All right. And that's how the pattern was. This is called the daily structure. It's called the daily structure. So now let me show you. Let's go over a couple of slides here. So I've created a slideshow to show you guys to make it more make it more clear for you guys. So this is called the daily structure. You can see we have different variations, right? Because market makers are not going to give you the same thing over and over again. So we have this variation here. We have this variation here. And then this is for selling if you're selling, right? And this is for buying. All right, this is for buying. So it's just basically the inverse. So you can see we have the consolidation here. We have the breakout inducements. We have the high of the day, HOD, signifies high of the day, and then price is going to reverse from that area, take it back down, and then end the day in consolidation again, going into the next day to continue the same pattern, right? This is the second variation where you have an M formation where they're going to trick you as if they want to continue up, but instead they're going to do like this, right? So these are the two variations that you should be looking for. And then if you're buying, just inverse of this, all right? Just the inverse. So this is called the daily structure. In case you don't know the name, it's called the daily structure. Some other people call it AMD, but I prefer to call it the daily structure because it's a structure that happens on a 24-hour period, right? This is going to be 24 hours. This is going to be 24 hours from the start of the day to the end of the day. So it makes sense to be called the daily structure, right? For clearer clarity in explanation. So now, this is a picture of a downtrend, hypothetically. A downtrend, and you identify the daily structure, right? So when you look at the plain charts, just look at the plain charts and then look for these patterns. You're gonna see when you have the downtrend where you have lower highs and lower lows, lower highs and lower lows. Usually what people see, they just see the highs and the lows, but they don't really see what's actually causing the highs and the lows. This is what causes the highs and the lows, right? When you have consolidation like this. So this is the Asian session consolidation here, Asian session consolidation here, Asian session consolidation here, right? This happens like this, right? And that's what creates the higher highs and higher lows. And what most people don't know is that you see this pattern that we see here as head and shoulders pattern that happens on a large scale is actually that takes like maybe like 3 days to form. This is actually what's happening in there. Because what's happening is, let's say you have an uptrend, and then you have something like this. The price comes and consolidates, and then you have something like this for the head, right? And then maybe price comes and consolidates again. Then you have like this, right? This is basically your consolidation here. So you have your breakouts, sell at this high, come back down, breakout again, sell at this high. Now I'm going to show you guys examples of this. So that's how you can use it to reverse this trend. For example, look at this here. You can see this W formation. So most people, they only see the W formation, but you don't know that inside this W formation, you have that pattern going on here. You buy at this point. All right. So this is what it looks when you have the daily structure in the trends. Now, here's a couple of examples of what I'm talking about. All right. These are a couple of examples of what I'm talking about. So as you can see here, we have this uptrend, right? Price has been going up for an entire week. So we have Monday, Tuesday, Wednesday, Thursday, and Friday. Price has been trending to the upside. Now, what do we have here? Can we identify that pattern? Now you can see how this consolidation are tight. You can see these tight consolidation areas. So this tells you that this is below 50 pips, right? So you can see we have the consolidation here during the Asian session. We have the breakouts, right? In this example, they give us the W formation like this, and then price continues to the upside. These breakouts here, they're gonna get people to start selling, right? People are gonna start selling because of this breakout. They're gonna draw a line here. This is their support. They're gonna start selling, selling, selling. And funny enough, people that are trading break and retest, they're gonna see this as a retest here. They're gonna start selling even more. And what happens? Price goes and hits the stop losses of everybody that was selling this in order for them to continue up. Now we have the next day, we have another structure here. You can see the daily structure here in this area. You have the consolidation, we have the breakouts. You can see the breakouts even 3 times, right? So you can see how they break out 3 times, giving you this triple bottom here, and then the reverse off of there. Continuing the uptrend, we have consolidation here. We have consolidation here. We also have a mini consolidation inside here. We have the breakouts. We have W formation, and we have this going up. If you even look at this, you can even think about this as a head and shoulders pattern that formed here, right? The head and shoulders pattern. Basically, a head and shoulders pattern is an M formation or W formation variation. So you have an M formation like this, right? And then that's your head and shoulders, right? So that if you just cancel this out, you have your M formation. So basically, that's what happened. That's what happened. All these things are just variations, right? That's what happened here. You have shoulder, head, shoulder, and then price reverses up. If you cancel this out, you have your W formation like this, right? So the next day we have another pattern here. We have consolidation here. We have the breakouts, W formation, reverse, back up. We have, in order for them to reverse the trend, right? In order for them to reverse the trend, we have consolidation here. We have the breakouts to this high, goes to this high, takes out a little bit of liquidity, goes back down, takes out the liquidity here, and then goes back up to take out more, even more liquidity at that high. So this is what you call a whipsaw, where they're just gonna do something like this, right? Hit you twice. So they took out liquidity, induced people to take buys at this high, reversed, went to hit their stop losses. So you can see how they intentionally went just below here. Why do you think they went there? Why do you think they went below this area? To take out the liquidity of people that were buying, chasing this uptrend, buying these breakouts. Their stop loss is going to be here, right? The stop loss is going to be there. And then after taking them out, go up and do whatever they want to do, continue the uptrend or whatever. Right. So here's another example. Here's another beautiful example of what's going on. So you have Asian session consolidation here. Price breaks to the downside, reverse, right? You have another Asian session consolidation here. Price breaks to the upside. In this case, price didn't really reverse that much. You can see the M formation. It just went down a little bit, mainly because this is an uptrend, right? In an uptrend, we're looking for this. I'm not looking to sell this, right? We're looking to take it up in an uptrend. You have another example here. Now it's an uptrend. You're looking for buys. Price breaks to the downside and then reverses off of there. The next day, we have the same pattern. Asian session consolidation. Price breaks to the downside, reverses back up. Now, in order to reverse this trend, we have this high here. We have this area of liquidity. You can see price consolidate, breaks to the upside to this liquidity box, taps the zone, gives you an information, reverses back down. Anybody that was buying this breakout is trapped at these highs, and your liquidity, your stop loss are going to be taken out. Where did they go to? To this support zone here. To take out, that remaining liquidity that was available at those areas. Took out all the liquidity in these areas here. Right. So here's another example, but this one is in a downtrend. You can see a downtrend. We have Asian session consolidation, breaks to the upside, M formation, reverse back down. Asian session consolidation, Asian session consolidation, slight breakout, not quite much. Still have the M formation here. We have another Asian session consolidation here, breakout, M formation, reverse. Well, in this example, we didn't get that. We didn't get what we like to see here, but this one just tanked. But basically, if you were following this trend and you took a trade here, took a trade here, took a trade here, you can basically hold this. If you held this all the way to down here, that's about like 100 pips. You can hold this to this point and hold this one to this point, right? Right. So this is how powerful the strategy is. If you're a swing trader, you can hold this for till the trend ends. If you're a day trader, you can enter here, maybe close here, then enter here again, close here, then enter here again, close here, right? That's basically the daily structure. So this is why it's called a daily structure, because it's a pattern that happens frequently on a daily and weekly basis. Here's another example. Now, this is coming from this picture here. So you see where this stopped, right? This was the end of the week. You see where this stopped. Is the next slide is a continuation of that, right? So you can see this is it, right? So if you look at this picture, the very next week, so this was a Friday coming to Monday. In the very next week, we have Asian session consolidation here. We have the breakout, mini M formation at this high, and then going back down. Now, the crazy thing is, if you look at this, this is a support level, right? This is support level. What do we have here? After the breakouts, where do you think most people's stop loss are going to be people that are buying this? Where is the stop loss going to be? Stop loss is going to be below here and also below this support level here. So where did they go to? They went because they want to reverse the trend. They went to take out the liquidity up below that low. And what's the pattern that they used to take out that liquidity? You can see how now look at this. This is actually crazy. You can see how at this exact support level, that's where they decided to end the day and start consolidating, right? Getting more people to buy. So now, as they're consolidating at this level, remember, people are going to be buying at support. People are going to be expecting this to continue back up. But we know that liquidity is below this area. There's liquidity, the stop losses of people are below this area. In order for market makers to reverse the trend back up, they need to induce you to take sells so that they can take buys and offset the people that are buying, take out their stop losses and then go up. So what happens? We have this induction after this Asia session consolidation. We have the induction and we have the price moving to the upside. After inducing people at this area, this is where they closed above the range, right? And then took this back up, right? And what you're going to also notice is you're going to see a variation of the head and shoulders pattern. So you have a shoulder here, you have the head here, and you have a little tiny shoulder here, or maybe you can count this as the shoulder, right? So you have the head and shoulders pattern here. So shoulder, head, shoulder. Take this back up, right? So as you can see, liquidity below, take it back up. Asian session consolidation here. We have breakout to the upside first, then come back down, take out the liquidity at this low, right? This one, they didn't break out to the low. They just spiked with news, take out the liquidity. And you notice immediately they took out the liquidity, all the stop losses of people that are in this area. Immediately they took this out. What happens? They move up immediately, right? So they all the people that are stuck here had a chance to getting in on this trade and then go again the next day, give us consolidation, breakout, reversal, back up. Also, this is also playing as the head and shoulders pattern here to complete the structure to reverse this back up. So this is how the daily structure is used. What I'm going to be showing you now is I'm going to be showing you live examples of what happened, right? So I trade this strategy consistently and I teach this. I've been trading this for over 3 years. Now, this week, right, the week that just passed from 10th of March all the way to 14th of March, you can go and check it out on your own by your own self after the video. Right, from 10th of March to 14th of March, I'm going to be showing you all the trades that showed up with this pattern during this week, right? So there are a couple of trades that showed up this week with the pattern, right? So now, for those of you that are still learning the strategy, that are beginners or they are new to the strategy, the main thing that you need to focus on is following the trend. You need to follow the trend. If you don't follow the trend, you're gonna get messed up. You need to know what you're doing, right? So there are ways of going against the trend, but you have to understand when the trend is going to end, which is something that is more complex than what I'm explaining in this video. I'm just showing you guys the basics. All right. So let's say you're following this trend. All right. Let's say you're following this trend here. This is your GBP coming in on Monday. What do we have? We're following the trend. So if we're following the trend, we're not going to be taking these sells here, although the sell did work and it did happen, but it's going to be a short-term thing. All right. Or maybe you're scalping. All right. So you can see how we have the Asian session consolidation here. Right? We have Asian session consolidation, and then we have the breakout to the upside to take out the liquidity of people that are selling, comes all the way down, takes out the liquidity of people that are buying, takes this back up. So you can see we have a mini head and shoulders pattern here. So we have shoulder here, head, and we have shoulder. If you're trading head and shoulders, you can enter at this level. If you're trading the first leg, you can enter here or enter here. Anywhere is good. So you can basically take this trade all the way back up. Now, the one that I'm moving interested in mainly is this one here. There's a pattern that showed here. So to reverse the trend, so you can see how the trend reversed back to the downside, right? So looking at this, let me just enlarge this a bit. So this was a trade that I saw, right? This is a trade that you can easily catch. Now, what I teach on trends is you're gonna know when the trend is gonna end, right? It's something that I teach. We call that levels, right? You're gonna know when the trend is gonna end. When the market has been going up for more than 3 to 5 days, basically we call it levels, 3 levels, right? Price goes up for 3 to 5 days, you can expect a reversal. That's the concept that we trade here, BTMM, beat the market maker. That's the concept. That's what I teach, right? So let's just count that from this reversal point, from this downtrend here. So you can see we have a downtrend that was happening here. Now we're going to count from the reversal point 3 to 5 days to these other reversal points here. So you're going to count, okay, where did they actually start reversing? Now this is consolidation. This is not really a reversal move, right? So where are the days of rise? So we have a day here. This is the first day of rise. We have another day of rise here, and then we have another day of rise here, and then an extra day of rise. So how many days is that? We have 1, 2, 3, 4, 5. 3 to 5 days, expect a reversal. A reversal is coming up, right? That's the strategy that I trade. So looking at this here, I was expecting a reversal to happen at this point as I saw that price went up, came back down, broke some structure at these levels. So I was expecting the daily structure to show up to take this to sell. So you can see we have Asian session consolidation here. We have the breakouts, mini M formation. This continues down. You can take a trade here as a sell. We have another, we have another, the next day, we didn't really get the breakout that we are looking for. We didn't really get that breakout, right? So nothing there. And then the next day, we have these breakouts, but no entries, right? So this is a trade that you could have easily caught here, and you would have entered this probably like somewhere here with your stop loss above and take this down for maybe a 1 to 2 or maybe a 1 to 5 risk reward. Or if you're targeting down here, if you're a swing trader, you can take this all the way down here. This is going to give you a 1 to 6 risk reward on this trade. All right. So if we go to the next pair, Euro USD, this was another trade that we took. Let's see. This is another trade here. So you can see if you're following the trend, if you're following this uptrend, you could easily take buys. You can easily take buys at this area. So you can see Asian session consolidation, breakout, continue up. If you held it to the next day, you could have caught this entire move. The next day, we didn't have that breakout. So now if you're looking for a reversal here, this is your Asian session consolidation here, right? Or you can say this is the consolidation. We have the breakout to the downside, breakout to the upside, take sales in this area. All right, didn't really get any other trades down there. Let's go to EuroCAD. All right, we're following this uptrend. This is your trade here. So you can see Asian session consolidation, break to the downside, continue up. If you caught this maybe somewhere in here, you would have taken this up for about 290 pips to the upside, right? So we have price reverses, break structure. We have Asian session consolidation, breakouts, information, reverse, back down. Didn't really get any other breakouts here. I mean, we have this little breakouts that happened here, but that's not really at the right time. That was at the end of the day. Then we have the Asian session consolidation here on Friday. We have breaks to the downside. We're looking for sales, so we're not taking these buys. We have, but you can take these buys if you took these buys, right? For a short scalp, that is about 100 pips. And then if we took this information here, that's about how many pips again? Back to the downside. That's about 90 pips back down. Right. So how many trades have we counted like this? So I've counted like 7 trades. So we have 1, 2, 3, no, 1, 2, 1, 2, 3 trades here. And then on Euro USD, what do we have? We have 1 here. We have 1, 2 here. So that's 1, 2, plus the other one, 3. That's 5. So that's like 5 trades already in 3 pairs. Let's go to Euro CHF. This was actually a trade that I took. Didn't hit TP, right? Just went halfway because the day ended. This was on Friday. The day ended there. But basically, let's see. Let's look for the trend here. We have a downtrend here. So basically, you can't take this buy unless it's a short scalp. Price went all the way up, all the way up. Came back to this high. Tried to reverse here a bit with an M formation, but didn't really go that much. Then we have the trade here, right? Very tight, very small push to the upside. Tapped it 3 times, went back down. We know that the trend has reversed. We have our Asian session consolidation here. Break to the downside first, went to the upside to take out the liquidity at the upside. Gonna sell in this area, take it back down. The next day, what happened was they went up here, took out the liquidity at this area. I took this for a sell here. All right. And then let's see, GBP USD. We have the same pattern. Asian session consolidation, breaks to the downside, took this up. That's a short scalp, right? But this is an uptrend. Trend hasn't really reversed here. Price came all the way back up here. Tried to reverse at this area. Didn't really reverse like that. Just came down for a short scalp. Went back up, right? Then we have price taking out liquidity. Price took out liquidity at these highs. So you can see this. This is a news accelerated events or liquidity hunts, stop hunts above this Asian range, right? Liquidity hunts went back up here and then reversed for the day. No trades after this day here on GBP USD. GBP CAD. I actually took a loss on this one on Tuesday. This is a trade that I took. So if you're chasing the uptrend, then there's another buy scenario here. W formation at that low. Went all the way up I took a sell expecting this M formation here. This one didn't really work. News went and took it back up, although we still have the M formation reversal at this high. All right. The next day, what do we have? Asian session consolidation, breakout, reverse, back down. You can see how clean this is. Breakout. Now, these candles are to induce you to take buys, to take breakouts. But we know that we are expecting sells, so we're taking this back down. The next day, we didn't really get much, unless you say this is the Asian session consolidation, and then a break to the upside, information reverse back down, right? That's a more advanced pattern variation. So I won't be going deep into that one. The next day, we need to have any breakouts that because it's a downtrend now, so we're expecting break to the upside, then down. If you're taking this is going to be a short scalp. All right. We have another trade here on GBCHF that I took. This is a trade that I took. We have information like this. I took this on the sell at this area, stop loss above. This went straight down to my take profits. You can see the pattern here. We have Asian session consolidation. Break to the downside first. We're taking this, you're going for a short scalp. Went all the way up, give the pattern that we're expecting. Also, there's a liquidity hunt at this liquidity box here. And then price went all the way back down for about 30 pips on this, right? So this one, you can see we have the pattern showing up here. Asian session consolidation, break to the downside, break to the upside. If you saw the bought here, you'd have caught this and caught this back down. All right, we have the breakout information at this high. Didn't really reverse that much. The next day, we have the same pattern showing up, W formation. Same pattern showing up here, W formation. Take this back up. So this basically showed up how many days in a row. All right, we have GBPCHF. We have the pattern showing up here on Monday. Asian session consolidation here. Break to the upside, reverse back down. We have Asian session consolidation here. Break to the upside, reverse back down. Consolidation here. Break to the downside, reverse back up. So you can see the daily, this is why it's called a daily structure, because it shows like almost every day. All right. You can see how this also plays out as a head and shoulders pattern like this, right? Like I explained, the next day again, we have Asian session consolidation, break to the downside, take it back up, right? Also to the upside, information on this high. This one didn't really work out that much, right? So let's move on to the next pair. We have USD CAD. We have Asian session consolidation here, break to the upside. Didn't really get any reversal there. Asian session consolidation here, break to the downside, reverse back up. Consolidation here, break to the upside, reverse back down. Consolidation here, break to the upside, reverse back down just a little bit. All right. Asian session consolidation here, break to the downside, didn't really reverse that much. But if you know that this is a downtrend, then you know that you shouldn't be taking this buy. So this is a short scalp. Right. So that's most of the if I'm it's gonna be a long video if I continue going through all the other pairs. So basically this is the strategy, this is the daily structure. This is what I've been trading for years and years on. So if you're struggling with your trading strategy and you're looking for a trading strategy to use that actually works, or you're having problems knowing when to buy and sell and you keep losing trades constantly and blowing your accounts, I have a fix for you. All right. This is something that I've been through. I've gone through all this. All right. I've been trading for 5 years now. I've gone through years and years of looking for the right trading strategy. That's actually one of the main problems that most people face, especially beginners. They're looking for that trading strategy that actually works. Now, I'm not talking about the holy grail or anything or perfect strategy. I'm talking about something that actually works that can provide you winning trades and make you money consistently in the long run, right? Not some buy and sell indicator or some sort of resistance, supply and demand type of stuff. No, this is something that is technical and can provide you with a sustainable source of income if you master the strategy, right? If you're having problems knowing when to buy and sell, this is going to show you. I'm going to show you where to buy and sell using this trading strategy. And if you keep losing trades constantly and blowing your account, it's mainly because you're not using the right information, you're not using the right strategy, right? And that's the reason why you keep losing trades and blowing your accounts, right? So I created a course called the Market Maker Mastery course, where I break down most of the concept written or talked about in this video and in my YouTube videos. I break it down even more, go into entries and exits. You learn exactly how I trade, the entry and exit trading strategy, trade management strategy. So it's important not just to know when to buy and sell, but also to know how to manage your trade when you're in that trade. Because one of the problems that most people face is when you enter a trade, you put in break even too early and then the trade hits your break even and then goes in your direction, or some of you close your trade early because you don't know when to close the trade and stuff like that. So entry and exit strategy, trade management, risk management playbook, how to grow small accounts, how to trade profit accounts. You're gonna see it inside the course. How to trade in line with market makers, how to trade in line with market makers, how to identify the correct trend, right? How to know when to buy, when to sell, when you should be looking for buys, when you should be looking for sales using the daily structure and all those things. So I created an advanced course with step-by-step videos designed to guide you in the right direction. So if you want to get access to the course, the link is going to be in the description below. I'm doing a 50% discount during this period. So if you want to get a 50% discount on the course, you can use the code DanFX50. Now the code is going to be valid till the 31st of March 2025. So make sure you get the course before the discount expires, even though it goes back to the original price. So click the link in the description below to get access to the course. And also, if you want to join my free Telegram, you want to get more updates from me and learn from me, you can join my free Telegram. The link is going to be in the description below. And I'll see you guys on the next video. All right. Subscribe if you're not subscribed. Take care.